Yeah. Hi, so good morning, everyone. Am I audible? Can someone tell me through the chat box, am I audible to everyone? So, should we start a session or maybe we will wait for some more 5 minutes and then we can start off? Yeah. So, we'll start off a session by quickly saying, like, I would like to thank everyone for maybe giving me or making me a part of this webinar and giving me an opportunity to maybe uh, come in front of you all and share what are my opinions or what are my expectations from this lockdown, this COVID 19 situation that we all are facing currently. So, I would like to thank the faculties, the dignitaries who have given me a chance to come on this platform and maybe address the students on what can they do about this situation, how can they tackle this situation in a better way, and maybe be a better individual when they come out of this lockdown or this pandemic after this lockdown ends. So I'll start off by explaining three basic terms which maybe everyone would have heard, or all the news channels would have been maybe talking about these three terms, uh, telling about the economic impact of the COVID 19 pandemic. So these three basic words are recession, slowdown, and depression. So, quickly having a brief background about all these three words. So a slowdown is particularly, these words are not interchangeable. Uh, so slowdown is a decrease in the interest rates, the interest rates in the economy. So if India is growing at around 5%, 6%, and if suddenly in the next financial year and India starts to maybe grow at only a meager 1 or 2%, that is what you call a slowdown in the economy. You don't mean negative interest rates in this kind of scenarios. The next term that we call is a recession. Recession is generally a negative interest rate scenario wherein India is generally growing at a negative 1 or 2%, which is in the case which people are expecting in this COVID 19 scenario. But this negative interest rates only persist for a meager 2 quarters, 3 quarters, or 1 year. So that is what we call a recession, which we faced in 2008 and 9. After this depression that we saw in 1929, the Great Depression of 1930, what we call it, that means a negative two-digit scenario, like the GDP is decreasing by around 10 to 15% for a longer term period. That means for the Great Depression of 1920, 1930, we saw the interest rate scenario was the GDP was decreasing by 15% year on year for a major 4 to 5 year period. So that is the difference between these three terms. So now, telling my opinion about this particular this thing, my main mantra for this lockdown is prepare for the worst and hope for the best. This is what I would like to tell you all too. We have to prepare ourselves in terms of economic, financial, social, all the aspects, the pastel aspects. We have to prepare that for the best and hope for the prepare for the worst and hope for the best. The next is people here. The when we talk about economists, when we talk about global leaders, the CEOs, the The people in the corporate world, they are expecting that the economy of India can contract by 1%. But I would like to hear quote also stating that the economy can come down by 1% only is there if the lockdown ends on 3rd of May. But here, if the lockdown gets extended by from 3rd of May to maybe another one more month, the economy can go down by 2 to 3% is something which I expect. So here I would like to say that a typical this kind of scenario which we are currently facing is very unique in itself. When I compare it to the 2008, so a lot of people are comparing this situation to the 2008 crisis, the 1930 depression. But on a scale, when I am given an opportunity to weigh this particular coronavirus pandemic, then this pandemic would be between the 1920 1929 Great Depression and the 2008 financial crisis that we have faced, and we have learned a lot of things from that. So this would be between these two aspects because it would not be as severe as the 1929 Great Depression and maybe something more than the 2008 financial crisis. So when I compare 2008 financial crisis with this, uh, in the 2008 financial crisis, everything was not locked down. People used to go to work. The income and spending, investments, everything was hurt. The 2008 financial crisis was majorly a demand shock. But here, when I talk about COVID-19 pandemic, it is a combination of demand shock, supply shock, the private consumption is also hit, supply chain disruptions are also happening, and production slowdown is also happening. Supply chain disruptions means the corporates are not able to procure their raw materials from the manufacturers, because of which there's a production slowdown. People are not able to produce much because they are not able to, the demand is already subdued. People, due to lockdown, are avoiding their spendings because they have much income. So all of these areas have been hurt because of the coronavirus pandemic. In 2008, that was not the scenario. People were fearful, but they used to spend and people used to go to work. The economy was running. So that is the main difference between what we talk about 2008 and uh, the current situation that we are currently facing. That is the major difference between these two. So now we talk about the financial markets in India. The major difference between a typical bear market that we have currently faced in the history of the financial markets. So a typical bear market, when the researchers say the typical bear market ranges from around 12 months to 15 months. So when the markets crashed in 2008, the indices crashed around 50-55% odd in a span of around 14 months. So that is the kind of recession that we had faced in 2008. But here, in this case, what we are currently facing is the indices are correct around 30% in just 18 trading sessions. So this is a new scenario that we have currently faced. We have never experienced such fear in the minds of investors. We have never seen this fast correction. So this is a new scenario that we are currently facing. 30%, 35% crash in indices in the past 18 sessions is something that everyone has taken everyone by shock. So that is the impact of coronavirus in the market, the COVID-19 on the markets. So now when we talk about, everyone is talking about giving a fiscal stimulus or a economic package to the corporates so that they can revive and go better. But here India is facing a similar is facing a double whammy currently. What I am talking about is, so in 2008, we had just come out of a bull market. In 2007, the early 2007 and the later part of the 2007 also, the markets had rallied considerably when I compare these two situations. So markets had rallied and then it gave 50-55% of its gains in the 2008 when we were hit by this crisis. In 2019, but 2020, what we are currently facing is 2019. 2019 was already a bear year. We were going through the US China trade war, we were going through the oil crisis also, and the Cold War, which was going on between countries in the world. So, I just wanted to interrupt in between saying that I'll answer to all the queries so whatever the queries which you have, I'll try and maybe quickly come to that queries in the last 15 minutes if you don't mind. So, yeah. So, we had a bull run before the 2008 financial crisis, but before this crisis, we already had a bear run, and we still are hit by some more scenarios that we are currently facing. So now when we talk about USD INR, currently already trading at 76. It is an all-time high for them also. So if India gives us fiscal or stimulus package at this point in time, so for example, in 2008, India gave 2% of its GDP as a stimulus package or as a spending for the to revive the economy. So if India gives a similar fiscal stimulus package at this point in time also, that along with the intervention of the RBI, this will take a hit on the USD INR, which India currently cannot afford. So this is one major point that we have to keep in mind if we are also judging the scenario with respect to the uh, rupee or the currency side of it. The next was when we talk about crude oil. Crude oil is helping India save some of its expectations. Just a second. Yeah. So when I talk about all these aspects, when I talk about all these aspects, crude oil is already helping India save funds because India is a large importer and India is a less dependent on exports. So deglobalization, if it happens, as the people say, it will not be so severe for India, and that is why people like large organizations such as International Monetary Fund and all the other World Bank, ADB, have suggested that India and China will come out of this recession much earlier. So India and China will be the two countries who will not face a major recession as such, and that is what I agree with also. India and China will be a better position. They will be continue to be manufacturing hubs. India will capitalize on these situations also and will come out of it better. The next I would like to go on is what impact will it have on the corporates or the MSMEs. So one part I would like to suggest is has a debt exposure. People, corporates have to pay their interest. Corporates have to pay their debts. They have to repay their debts also. So, like in 2008, that we have the government has done, they had given a chance to restructure them. So we had a the government and the RBI had given a chance to all the corporates to restructure their businesses, their debts. Restructure their debts means they were given a chance to reduce the EMIs, reduce the interest rates, you mean, and they are given a chance to also tweak the tenure if they had to. So these were the changes, the one-time changes which the government or the RBI had given to the companies if they are facing problems in the 2008 financial crisis. So this can be one aspect that we can look forward to, debt restructuring. Maybe government or the RBI can give this particular option for the corporates and MSMEs to tweak their debts so that can reduce the burden on the corporates also. Uh, Now, another major situation that India is facing, a lot of people are talking about how will the markets recover and will the markets recover after this coronavirus pandemic. So I just wanted to say that people are fearful currently. So I remember a famous saying by Mr. Warren Buffett saying that when be fearful when the people are greedy and be greedy when others are fearful. So this is an apt saying when you are investing in the markets. So when I talk about V-shape or U-shape recovery of the markets, I am a firm believer that markets will have a staggered recovery and not a V-shaped recovery. So the difference between these two is a V-shaped recovery means the markets will recover as soon as the lockdown ends. This is not the scenario which we are facing currently. A V-shaped recovery is nearly impossible for the markets. When we talk about U-shaped recovery, it will be a staggered recovery. Whenever the lockdown ends, the government has also said that the lockdown will end in parts. It won't be like it will not be a one-time ease in the lockdown that will be provided by the government. Now, when we talk about U-shaped recovery, uh, we once the lockdown ends, it will take time for the people to forget all the things that have happened. So people will be fearful to spend money. They will be fearful to invest money. Like you and I as an individual would maybe fear to go in the Mumbai local trains or fear to travel all around the world. That is why even if the lockdown ends on 3rd of May, the in it will take 2 to 3 months for the economy to revive after that. So even if the lockdown ends and all this scenario has changed, it will take 2 to 3 months for the economy to revive. So it will be a staggered recovery for the markets, hoping for a U-shaped recovery for the markets. Uh, so when I talk about sectors helping the U-shaped recovery, automobile can be one sector which I remember. So I'll quickly. So one ma'am has already asked me a doubt on the U-shape or a V-shape recovery, which is the best one. Definitely, V-shape recovery is the best one because that is it. The economy comes back to normalcy in very short span of time, and that is what people are expecting. But people believe that the economy should be revived as early as possible. But this is not the case here because we will be reluctant to spend money. After even if the lockdown ends, people will not be so like work from home has become a normal scenario now. So when I talk about a normal layman logic sense, work from home uh, is better suited for corporates at current point in time. After the lockdown ends, the commercial real estate will come down. This is what I think will come down because large corporates will prefer their employees to stay at home and work if their output is the same as which it was earlier. So this can also be a situation wherein commercial real estate can come down because companies will tell their employees to work from home if their output is the same as it was earlier before the lockdown. Correct? When I talk about automobiles, it depends on how they innovate because people will be reluctant to go in the local trains, prefer public transport. So it depends upon how they innovate from this current situation and provide better services to the customers in order to revive their sectors as well. Restaurants will also be hit because of this lockdown because people will not travel, people will not go out and eat their stuff just as the lockdown ends. There will be a scenario of fear in the minds of people. So when I talk about the sectors impacted and the economic packages like, for example, The airline sector in the US have given the US government has given a $50 billion fiscal stimulus package, an economic package to the airline sector. $25 billion in grants and $25 billion is loan. So this is what something which I am also looking forward to from the government and from the RBI, stating this kind of packages would be given, but the trade-off or the balance between the fiscal stimulus packages and the INR is which we have to see. This trade-off is to be better handled by RBI and the government as well. So this is something that we need to keep in mind. Uh, Now, when we talk about sectors which are impacted, and if we have to invest money in the financial markets, what do we have to see, or which else sectors should I invest in? And personally, so I'll go to the sectors impacted first, sectors benefited second, and third, we would go to how your individual investments would span out in this current lockdown period. So when I talk about sectors impacted, the biggest sector which is impacted currently is airlines. It has been completely shut down. Travel, tourism, airlines has been completely shut down. So when I talk about the stocks, namely Indigo, SpiceJet, all have corrected around 50%. Their prices have halved from the peak which they were in. They have a relief from the crude oil that is better for them, which will help negate the prices, the impact on the airlines as such. So first is the airline sector, which has been impacted. Second is the travel and tourism, because hotel stocks which are currently listed on the exchange are trading at a discount of around 40 to 60%. So this is the impact which has been created due to this pandemic. Next is malls and multiplexes. As you and I know, malls and multiplexes are closed down due to this pandemic. They are also likely to suffer due to higher fixed costs. So the companies which have higher debts in their books will suffer more because they have to service their debts, pay their EMIs, pay their interest timely, because of which it will create a burden on them. The fourth important sector is automobile, leisure, maybe gems and jewelries, and then textiles. So these are all sectors which will have a negative impact. Uh, so you should, maybe when looking at investing in the financial markets, you should try and avoid the stocks till the lockdown ends. This is what my opinion is. These all sectors would be in a burden for around next 2 quarters. Their financial quarterly numbers would also maybe under distress. So you should try and be in the sectors which are currently performing better, or maybe be with large caps. So now when we talk about sectors which are gaining from this particular situation, as you all know, FMCGs, they are currently working. The procurement of raw materials would be a certain problem for them, but their factories are running, their businesses are running. So, so when I talk about FMCG, only the essential items which they have their operations running at this point in time. So these are all affected, but they are not affected as such as like what the other sectors are. And we have pharma. Pharma is also working. Pharma, the they are able to procure the raw materials from China for maybe having those drugs manufactured, having those medicines manufactured. IT is also one which is affected, but at a lower rate. Their order flows have decreased, because of which they are less affected. So when I talk about impact on individual investors, uh, COVID-19 pandemic will affect individual investments also, and this will, so people had this particular mindset wherein if I invest money in equities, it is easy money. This is not the case here. Equity markets have shown what the real flavor of the markets are. It will uh, This is not a permanent or a structural change in the economy. The economy will come back to normalcy, but it will take time, is something which I wanted to say. Now, with these many changes in the economy, we should change our investment patterns also. Like whatever the people are currently, their investment patterns are, what they do is they buy in the rally and sell when the markets are selling off, when the institutional markets are selling off. That is why people do not make money in the markets. That is one major point that I would like to highlight on, because when the markets are going up, people start buying. That creates awareness in the minds of people, and they buy when the rally has been done by about 60-70%. That is when normal or a retail investor like you and me enter the markets, and they exit when they are fearful in the market. So, as I earlier said, be fearful when when others are greedy, and be greedy when others are fearful. In this current market, everyone is fearful and maybe not sure about what the economy will be after 4 to 5 months or 6 months. That is when you should start investing your money. This is the right time to start investing your money. That is when you will make money. So I would like to give an example here stating that more than 152 stocks listed on NSE gave a return of around 1000% to 30,000%. 152 companies gave a return of 1000% to 30,000% in the next decade after 2008 financial crisis. From 2009 to 2019 is the period which I'm talking about. For example, TCS gave a return of more than 1000% in this decade after 2008 financial crisis. So accumulate good quality stocks at this point in time when others are fearful. These value investing is something which I would like to focus on. So when I when I talk about good quality stocks, large caps, focused large caps is something which I emphasize on. Be with those stocks and they'll help you make money over the course of 5 to 7 years period. So as you see the history of 2008, after 2008, 152 stocks gave you more than 1000% return. That is what I'm looking forward to in the next 5 to 7 years, because all these stocks are trading at a discount currently. So it is good to invest your money at this point in time if you have a surplus. And investing at an individual point, I mean to say, is you should not allocate 100% of your money at one point in time. Do a staggered investment, for example, SIPs, systematic investment plans, which help you do a staggered investment over a 1 year, 3 year, 5 year period. That is something which I'm talking about. Or having, so this current situation is debt funds are something which are currently safe. So put your money into debt funds and have a STP, systematic transfer plan. Every month, transfer your money from a debt fund to an equity fund. That is how you will minimize your risk in the equity markets. Now, when we talk about the youth investing, or maybe people from the age of 21 to 35 investing in the markets and who have an horizon of 5 to 7 years, this would be an ideal situation where people would like to invest money in the equity markets. So, just a second, I would uh, try and answer all the questions which you have posted in the chat box, maybe in the last 15 minutes or so. So once I'm done with maybe talking about the impact, and then I would try and focus on all the queries which you have posted in the chat box. So when I talk about STP, SIP, these are all investments. So the best scenario for an individual or a youth for 21 to 35 having a horizon of 5 to 7 years, then only I would recommend get into equity markets. If you have a horizon of less than 3 years, park your money into some liquid funds, park your money into some FDs, and maybe some other savings bank deposit where you get 3.5% returns. Because less than 3 year horizon is something which I don't recommend getting into equity markets or be with some large cap companies. That is what I recommend for the people who have a horizon of less than 3 years. The next I would like to uh, tell you that be with the sectors which are least affected, like FMCG, like pharma, like essentials, who are having a 3 to 5 year perspective. So, this current situation in the financial markets had taught us what diversification means in the portfolios of people. People who had 100% allocation to equities are the people who have suffered the most, including me as well. So when you talk about 100% allocation into equities, I don't have any other investments in FDs, or maybe when you talk about any other portfolio, you don't have allocation into equity, into debt funds, liquid funds, or maybe FDs, gold, real estate. So when I talk about this scenario, you should have a diversified portfolio, and this is what the coronavirus or the COVID-19 pandemic has taught us. When the equity markets are not performing, the FDs, liquid funds, and other safe instruments would provide you uh, staggered or regular returns in case when equities are not performing. So you need to have a diversified portfolio depending upon your age. If your age is in the between 20s to 40s, that is where you should have maybe 40% allocation to equities, other 20% into liquid funds or debt funds, other 20% into FDs, and other 10 you should keep it for uh, maybe cash whenever the opportunities exist, or maybe cash for financial emergencies also you can keep it. Correct. Now, when we talk about diversification for a people who have maybe who are in the early 40s and late 60s, from 40 to 60 is the age horizon which I'm looking forward to. These people need to have their regular income going. They need to manage their retirement corpus as well. So they need to put money into capital protected. So they need to have their capital protected from the markets. That is why more of their allocation should be into fixed deposits, liquid funds, and debt funds, and less into equities. This is what I generally recommend for people who are in the age bracket of 40 to 60. Now, when we talk about diversification as well, be with stocks which are less impacted in this uh, scenario. So I'll try and scroll up to the questions which have been asked by people. So Mr. Rajesh is asking, how is the economy likely to recover after all this in your situation? So when we talk about recovery, as I already said, a V shape or a U shape recovery, as people are talking about, a U shape or a staggered recovery is possible in this case scenario, wherein the it will take some time after the lockdown ends. It will take around 2 to 3 quarters for the economy to come back to normalcy, for people to procure. So this is a not a structural change, but a temporary change that has caused in the economy and the corporates as well. For people, it will take time for the corporates to start back. Their working capital will be hit, so their cash flows will be a little bit stretched. They will not be able to procure raw materials from their manufacturers. This will be hit as well. The unemployment rate will increase in this uh, period as well. So that will impact their output as well. And that is so this will take around 4 to 5 months or 6 months time for the markets, even if we are free from this pandemic as early as possible. The next question that I have received is, how will markets survive after lockdown? Because already all the Chinese products are disrupted. So, two things that I can maybe logically I can infer from this particular situation is that the Chinese products, we do not have a do away with Chinese products. Once after the lockdown ends, people will start importing from China also. We are currently importing pharma raw materials from China in this lockdown situation as well. We cannot do away with uh, Chinese products, but we can reduce our dependency on Chinese products. So what will this be is, so Japan has already moved out their manufacturing hubs from China, and they're looking out for some better emerging markets to invest in. This is where India will come into picture. And if India is more likely to react to these situations and these opportunities, India will, in the next 10 years period, would be a can be a manufacturing hub in the world. So the next question which I have received for Mr. Rajesh, another one. What are the changes that we are going to make on how will business operate to maintain our economy while providing social distancing? So government has already maybe laid out a norm that factories will get open after 20th of April. So there are a lot of green zone areas where factories have come back to normalcy, but government has given an order that social distancing would be promoted in these factories as well. So uh, when you talk about factories, when you talk about offices are already promoting work from homes. Their output will be least impacted in this particular scenario as well. So I think the impact on the business will be there for a near-term period. But when we talk about 2 to 3 years or 5 years period in our economy, this will bring back the businesses to normalcy. It will take time for the companies as well as the corporates to recover from this scenario. But the economy, this is a, as I said, this is a temporary change that has been done in the economy and not a structural or permanent change. The next question which I have received in the chat boxes: what is your take on reviving the economy? What measures can be taken? As I already said, reviving the economy will take time. The measures which are being taken by the RBI as well as the government are in line with the what the corporates or what the companies are expecting from them. The fiscal stimulus packages RBI has given is trying to improve the liquidity, the credit flow. That is, liquidity and the credit flow is well taken care of by the RBI in their current briefing which they had given. So the liquidity and credit flow is being enhanced by the RBI because when the businesses come down to normalcy, they have more money in order to have their working capital going. So that is what companies and the banks need to make sure that when the corporates start working again, they are provided credit at a lower rate so that they can come back to normalcy as early as possible. The next question which I have, as this COVID-19 is a big problem all over the world, how is India going to manufacture the product that is coming from abroad? As I already said, like Japan has taken over, like there are companies from China and looking for better investment opportunities all over the world. Same is the case with the US. Same is the case with other countries as well. People are not sure about whether their manufacturing hubs which they have created or manufacturing factories which they have in China, how will they perform over the period? They are looking out if India sees this as an opportunity and comes back and maybe try to grab those opportunities as early as possible, India could well be a manufacturing hub. The next question that I have, Mr. Pramit Ravi, is it safe to invest the money nowadays in a company? So, as I already said, it is definitely safe for individual investors like you and me to invest into the companies after the Great Depression that we saw in 1929-30 also. That also did not deter uh, people to stay invested or get invested in the markets. So that was the worst case scenario that we had faced in the current past, like in the current century. But here in this case, Uh, it is completely safe to invest in a company, equity markets, in financial markets. But when we talk about a short-term horizon, it may or may not generate returns for you. But in the longer term perspective, maybe 3 years or 5 years, it will definitely generate returns for you in the market. The next question that I have is, what suggestions would you give to the new startups trying to sustain in the present market and after this situation? So, one interesting thing that I had read maybe a week back, that all the other companies, like due to this coronavirus pandemic, a lot of big corporates, for example, so due to this pandemic, a lot of demand has been subdued for other products. And we have seen that the demand for sanitizers, demand for face masks has increased considerably. And what the corporates and the businesses are currently doing is, like for example, companies like M&M, companies like Maruti, they are they have started to produce ventilators. So companies like this are shifting their business lines whenever they see an opportunity that exists in the market. That is what I recommend the new startups also, that whenever and wherever you see an opportunity, a change in business line is something that you can look forward to in order to be in order to have a dominant position in the market and to survive these scenarios. That is something which I have to say to the startups. Wherever you see an opportunity, don't get confined to any one service or any one sector. Wherever you see an opportunity that exists in the market, go and grab that opportunity. That will help you survive and maybe come out of this situation as early as possible. The next question that I have faced, so Darshana Devi is asking how will it affect the CAs? It will be a burden on the CAs specifically. So this is a social pandemic that we are currently facing. When in 2008, when we saw a financial crisis, after that also CAs were in demand. They will be in demand. The need for the CAs will arise. So after 2008, a lot of people have started depending on the CAs because they are in better positions. For financial planners, you mean financial analysts, you mean people have relied more on these people, their expertise, in order to help them come out of this situation. So the next question is, after this problem, how to maximize invest level of the industry. Mm, So after this problem is over, don't wait for this situation to get over. Start and invest money at this point in time in order to generate better returns. If you wait and watch and let this opportunity go, an opportunity gone will be gone. You won't get such opportunity in future to generate returns from the markets. When all the people are currently fearful, start investing your money and you will be generating considerable amount of returns from the markets. Is something which I would suggest. So how could the rural people overcome this serious situation as normal people? So there is only one answer to this question. What the government is saying, be at your home. The other things, the economy, the maybe infrastructure, and everything will be taken care by the government. Don't maybe go out of your home. Try and be at your home. Social distancing is something that I would promote in the current environment. Uh, if you don't go, you just be at home. Other things will be taken care by the government. Uh, the next question that I have is, India has changed its FDI policy so that China can't buy shares in big amount in Indian companies. Your opinion? So my opinion in this current scenario or this decision making that the government has done is a completely thumbs up. A great decision by the government in order to protect the domestic companies from maybe a hostile takeover or maybe getting acquired by some companies abroad. So a good move that as the government has done in order to protect the domestic companies. So is it the right time to invest in bonds and mutual funds? As Prakriti Kulkarni man has already asked this question. So definitely it is the right time to invest in bonds and mutual funds. People who do not have much knowledge about equity markets directly, mutual funds is something they can refer to or maybe uh, opt for is something that I would suggest. Uh, when I talk about mutual funds, I would give 2 to 3 recommendations that people can invest in, which I have seen over a period of time giving a return of around 13 to 15%. The higher of 15% is something which I would advocate for. So, mutual funds like when I talk about multi cap funds, I would name a few staying like ICICI multi cap or when I talk about Kotak Standard multi cap. These are the funds which have provided the higher side of 12 to 15% returns from the equity markets over a 3 to 5 year period. So these funds you can be in. You can be into blue chip funds like Axis Blue Chip, ICICI Blue Chip. When I talk about HDFC Top 100, these are the funds that you can stay invested in and start your SIPs or maybe start your lump sum investments through a staggered way in this current scenario, and you will be able to generate returns over a period of time. The next question, as I already addressed, which is better a U-shape or a V-shaped recovery, as I already addressed this particular this thing. What is your Another man has asked, what is your opinion concerning the tourism and hospitality industry? Uh, Tourism and hospitality is the worst hit sectors during this coronavirus pandemic, and this sectors, namely these two sectors, will take time for as soon as the lockdown is over. There will be fear in minds of people in order to go out or maybe go out to some other country for their leisure travel. So hospitality and tourism will take time to recover, and it could take maybe more than 6 months to recover for the tourism and hospitality industry. The next question which I have received is due to this lockdown, how is India going to face the financial crisis and how will middle class and poor people will recover from it? So, as the government is trying to help the migrant or migrant laborers who survive on day-to-day wages, they are helping them uh, give food, shelter, as well as other essential commodities, whichever they need. The state governments are trying their best in order to keep them calm in this current scenario. So they middle class and the poor class people who are stuck into some other state need not panic at the center. The central government and the state government are taking measures and adequate measures in order to protect these people from this financial crisis that we are currently facing, financial and social crisis that we are currently facing. So, social distancing is the mantra for all of them. Do your part with respect to social distancing, and the government will take care of you. So, the next step, which steps Indian economy need to take after the lockdown, as the briefing which was given by the financial ministry yesterday, stating that they will give a fiscal stimulus package only when the lockdown ends. So they are seeing a situation or an opportunity here, saying that they will provide a boost to the economy when the lockdown ends. So that is the step that the government has taken, that they will help directly or indirectly these companies in order to come out as early as possible. So another question which I have received is how is it affecting the new startups? As I already said, the for startups, people do not have a lot of cash with them. That is why they are relying on salary cuts of its employees or maybe job losses for its employees. And this is what they are resorting to in the current period. And this is the normal course of action for these startups as well. either are not sitting. So, like big corporates can rely on their cash reserves and give a normal of their salaries and keep more employees as well. But startups do not resort to their cash resources as they have less of it. So this is the normal course of action for them that they can resort to. They are currently resorting to salary cuts as well as maybe firing their employees as well. So people who have resigned their job in Jan and Feb and are planning to start their own business in April and May. So it will be a tough time. There are opportunities in the market, as I say. People who are starting to or planning to start their own business in this current scenario. As I earlier said, large corporates like Maruti, M&M are starting to manufacture ventilators. So you'll have to shift your business line from one sector to another, but you will be able to survive and start your own business over the course of time. But looking at these opportunities, analyzing the current situation and looking at these opportunities, you need to grab them up as soon as possible. One confined to one business line would be difficult in this current scenario, but you need to have your horizons open and look at two to three other sectors or other lines of business in order to survive this pandemic. Uh, so, what's the impact on job opportunities after lockdown is the question that I've received. So, once when I talk about the job opportunity scenario, already people are expecting that 30 to 35% would be the job rate, the decline in the job rate that the economy would face in the current scenario. Uh, so I think it would be difficult for people who are looking for jobs in the next 3 to 4 months. But as and when the economy recovers, so banks will provide credit and working capital to businesses at lower interest rates as per the RBI now, and they'll provide interest at money at lower interest rates. And when the corporates start to recover, that is when the hiring spree will also continue after that. When the businesses grow after that point in time, it will take some time for the markets, but it will definitely will. Next question that I've received is, will the lockdown be extended even more after 3rd May? Uh, a tricky question. I would leave for the government to comment on that. But definitely, as per my personal opinion, I do feel that the lockdown would extend after 3rd May for maybe another 15-20 days is something which am of the opinion, because if you want to the lockdown to maybe end on 3rd of May, the current situation, you should the number of cases should decline in the current scenario at this point in time. On 25th of April, the number of cases should decline day by day in order to lockdown to get ended on 3rd of May. Is something what I feel. But the number of cases are currently increasing day by day and are drastically increasing. So I don't think that the ease in lockdown would be provided by 3rd of May. The next is, how long will it take for the economy to recover from this brutal economic situation? As I already said, next 2 to 3 quarters is something that we need to be cautious while investing or while spending your money as well. So it will take around 2 to 3 quarters for the companies and the economy to get revived back and shift back to normalcy. How can middle class family recover from it after this problem? As I already said, cash is the king. People who have cash in hand will be able to survive. So one opportunity that people, are currently facing is the insurance sector. When people are fearful, the insurance sector is the most benefited out of it. People will feel the need for getting insurances for themselves. So when you talk about mediclaims as well, term insurances as well, people will feel the need for having these insurances, and that is when insurance sector will have a boom. So that is the opportunity that has been created for the insurance sector, and they need to have they need to grab this opportunity up. So when you talk about middle class family, cash in hand will definitely be a plus point for them, as in whenever on where they want to invest in, they would be able to invest at that point in time and generate better returns. So a gradual savings, investing or maybe putting their money in for financial emergencies like these. So a lot of people do not have a financial emergency fund, and this is the time wherein they realize that they should have saved some money for this financial emergency. And that is what lessons that we have to take from this current situation. How will the consumer confidence or spending hope to increase after the lockdown ends? So once after the lockdown ends, as I already said, that it will take time for the consumer to be confident to spend their money in the economy. So that will gradually happen after the course of 2 to 4 months. It will take time for the economy to recover. Will the consumer spending, demand, as well as when we talk about the supply chain disruptions that has been caused, will take time for the markets to recover. Uh, so next question that I have received is, what are the steps RBI needs to take to overcome losses incurred during this lockdown? So as I already said that in the latest briefing that RBI has given, uh, they have taken necessary steps in order to have a good stimulus package. They have necessary steps in order to decrease the repo, the reverse repo, in order to provide. They have already taken those steps in order to provide easier and cheaper money to the corporates in order to bring back their normal day-to-day operations as well. The necessary steps have been taken by the RBI and will be taken by the RBI in the course to come. Mm. The next, some questions are repetitive, so I hope their questions are answered while I am answering the other questions as well. As I already said, coronavirus will impact employment opportunities in India in the tune of 30 to 35% decline, is something which I am expecting and will recover gradually. So when I talk about what about the people working in the airlines, because everything is shut down. So when we talk about airlines as a sector, it has been completely halted, and many of the airlines have already suggested that they are. So, for example, one airline, I don't remember the name, but they have uh, cut their salaries of the executive employees and the senior management by 50%. They're already laying off, that they are giving a statement that they won't be able to pay the salary of the employees in the course to come. So this is the kind of scenario that the airlines are currently facing. But as US have given a fiscal stimulus package of $50 billion for their airlines, $25 billion in grants, $25 billion in loans. So this is the package that we will look forward to for the airlines to come back to normalcy. So we'll wait for the government and the RBI to provide such package for the Indian airlines as well, and maybe help them recover as soon as possible. The next is eradicating the COVID-19 coronavirus is also the best economic strategy. It may or may not. It, coronavirus, when we talk about the COVID-19 pandemic, when we talk about the earlier uh, flu that had H1N1, Ebola, the global economy has come out of it, and they have effectively come out of it over a course of time. So we need to just give the markets, the economy, the government some time in order to recover back and come back to normalcy. So as I already addressed, how will coronavirus impact small businesses, the policies? Businesses firms should adopt, as I already said, they need to broaden their horizon and look forward to 2 to 3 business lines in order to survive and come out of it in a better way. So Mr. Anwar has already said in the comment section that he thinks the government will withdraw lockdown by 3rd of May, otherwise it will be the worst recession for the economy and should maintain some strategic plan and action. As I answer this particular statement or I react to the statement saying that the government is also trying to uh, maybe strategically ease out the lockdown. It won't be a one time ease of lockdown that will happen on 3rd of May. If after 3rd of May the cases are coming down, then it will be a partial uh, partial operations will come into force, and some sectors will start their businesses, day-to-day operations after 3rd of May if the government passes. Next, for the further steps for the government for poor people in West, where does our economy facing problem after this crisis? I already suggested. How would small businesses recovered, as I already said. Uh, so, uh, Uh, the next question that I have faced is how will a final year college graduate, how can they stand out in the market to get a job? So here I would like to state that this is the time that you have got not to maybe chill out or maybe watch Netflix, but this is the time that has been that we have got in order to upgrade or upskills. We have to up our skills in order to be in a better position when the market opens, when the economy recovers. That point in time, we should be in a better position to, with respect to the other candidates who are looking for jobs, we should be in a better position to uh, showcase our skills. So uh, to like I would suggest you to have online learning, online certificates, or maybe you can have some courses. For example, Upgrad is one website which I remember that you can have certificates from top B schools or top universities abroad also. So they cost you around 3 to 4 thousand rupees, and you can have your skills uh, brushed up in this particular lockdown scenario. It's something which I would recommend the last years or the people who are newly entering the job market. So I've already some people have already told me that their internships have been revoked because of the coronavirus pandemic. Their job letters have been revoked because of the coronavirus pandemic. So this will be a tough time for the job markets when people are losing their jobs. This will be a tough time for the new students to come immediately in the job market. So I would suggest them to up their skills in this current scenario, and then when the market opens, you would be in a better place. You would be better placed in this market with respect to the other candidates. So, what is your suggestion for employees who have lost their job? As I already said, look for the opportunities that exist in the market, and there exist many opportunities in the market which you can grab and earn a living out of it. So I would suggest you to broaden your horizon, as I earlier said. So as I'm getting the questions in the chat box saying, how is it going to affect the 2020 graduates? I already said it will be tough time for the next 2 to 4 months for them also to get a new job, to come back to their original these things. This will take time, but surely you should uh, hope for the best time. The next is, as I already said, what steps need to be taken by the government to increase the employment opportunities. As I earlier said, the banks will give better credit flows at a cheaper rate to the corporates, to the MSMEs in order to function better. And if they provide them the cash flow that they need in order to resurrect their business to normalcy, that is when the job opportunity again will be created in the market. So which industry will get a boom after this period is something which we need to look forward to. Getting a boom after this, immediately after this, would be difficult for, I think, real estate. I think travel and tourism will be hit for a long period of time. Uh, Other sectors, when you see like pharma, is something which are least impacted. When you talk about IT, which are least impacted. When you talk about FMCG, these are the sectors that you can look forward to. Like banking and financial services will also come back to normalcy quite some time after the lockdown. So I think these are the sectors that you need to be in uh, as soon as the lockdown ends. There is a been rise in unemployment, as I already suggested. There is a solution for job opportunities, as I already. Is it really safe to invest in shares after the lockdown? I would recommend don't wait for the lockdown to end. Start investing currently during the period of lockdown when people are fearful. That is when you should put your money into the markets, and that will help you create money over a period of time. As I already addressed this particular chances of job opportunities for the new people who are coming into the market, uh, the one suggestion for them: start working on your skills, start working on the sectors that you need to research about the sector that you need to go into. This will help you get updated with the current economy, the current situation, and the current sector that you want to work in. This will help you for your interview questions, for maybe tackling or the helping the crack your interviews as well. So getting acquainted with all the new stuff which is coming into the market and working on your skills will place you better with respect to the other candidates. As I'm getting a question, would there be job opportunities post lockdown? As I already said, job opportunities will exist. They used to exist after the other like 2008 crisis also. It will be a short temporary shock that has been created in the market, but the job opportunities will come back in the market. It will take time for 2 to 4 months. Uh, how can we invest money in economy based on this, whether it may overcome profit or losses? So as I already said, the large cap or the blue chip companies will face losses for next two for 1 to 2 quarters. They may face losses in the coming quarters, but when you talk about over a period of time, when you see over a period of time for 3 to 5 years, they'll come back to normalcy. They'll start functioning and generating returns for you and your money over a period of time. So it would be a temporary shock. Uh, next, next is, as I already said, people who are working in airlines or people who are in travel agencies, how will they provide their family needs is something which we need to look forward to. But there are opportunities in the market. Don't get confined to any one business line. As I said, people who are working in airline or travel agencies can look for innovation in the market once the lockdown ends. Innovation is something that we need to look forward to. How will they innovate there? For example, automobiles. People will be fearful after the lockdown to travel from the local trains or any other public transport. That is how we need to see that automobile industry. How will they innovate their business line, their products, in order to cater to the masses? So these are opportunities for the sectors like automobile sector in order to innovate themselves up and revive their businesses as early as they can. The next is how will the FDI policy impact our economy? As I already said, it will maybe protect the domestic companies from getting acquired or from taken over by some other FDIs. Is a good move by the government. Will the impact on the education sector as such? As you are normally seeing that people have resorted to webinars and online classes. 85% of people who were in educational sectors have resorted to online webinars. So this has not hampered their motive or the objective have not been hampered. Only the course of maybe their teaching has been changed. As per the recent survey, only 15% of people have been impacted, or they say that they are not acquainted with the digital technology and they prefer a human touch. Other 85% people have said that the online webinars have a good impact on them and it has helped them save cost to a lot of extent. When I talk about uh, one student has asked me the exams are postponed, but when this lockdown is over, will the exams be continued? But our preparation is very low. This is the time, as I already said, to prepare yourselves for these competitive exams or for the course of action that you're looking for. This is the time to prepare. You get a good 12 to 13 hours to study, and that is when you can uh, brush up your skills or maybe prepare yourself for the competitive exams which are coming after the lockdown ends. So during quarantine, where should investors invest in mutual funds, in FD, or in financial markets? As I already said, ma'am, you should diversify your portfolio across sectors, be it financial markets, be it fixed deposits, or be it mutual funds. You should. So one thing I would suggest is rather than keeping have some money into liquid funds, that is where you can systematically transfer money into equities or maybe equity mutual funds. So as I already said, financial planning will come into picture at this point in time, and you need to look at your finances. People who are 20 to 40 invest more money into financial markets, direct equities, if you are having a horizon of more than 5 to 7 years. People who are having less than 5 to 7 year of horizon, be allocate more of your money into fixed deposits and debt funds. That is what I would recommend to people. But diversify your portfolio across FDs, mutual funds, equities, gold, and real estate. So I've already asked by people saying that which companies you should buy. So I would like to quote an example that after 2008 financial crisis, TCS has given a return of more than 1000% in the last decade from 2009 to 2019. That is the kind of return that I look forward to, but be into large caps. So when I talk about large caps, be into pharma companies like HUL, be into pharma companies like IPCA, Cipla, be into FMCG companies like HUL, PNG, and when you talk about big giants being like companies like Reliance, they have a lot of cash reserves with them, which will help them survive this pandemic in a better way. So after 3rd May, Indian economy, as I already said, will completely open or not. As I already said, I don't think there are chances of economy opening after 3rd of May. So as I already another question that I've received is after the lockdown, will real share markets rise? So sorry, as we already see that the markets have recovered quite a lot from the lows that we had 7,600 that Nifty saw. Uh, Markets have recovered from that point. So I think once the lockdown ends and people are coming back to normalcy and the businesses are coming back to normalcy, the share markets are bound to rise. So majority of the I've tried to answer the lot of questions that a lot of people have asked. So I've tried to answer the majority of the questions which people have asked, but still, if there are some questions, I would like to take it informally as well. Uh, you can mail back your queries or maybe whatever you need on Bhavesh S8898 at the rate gmail.com and reach out to me if you have any queries with respect to markets, with respect to investments, and I'll try to respond back to you as soon as possible. Thank you so very much for having me here, and thank you so much for giving an opportunity for me here. So I would like to thank all the dignitaries and faculties for having me here. I would like to thank personally Neerav sir also for having me here and giving me this opportunity to come in front of to have for giving me this platform to showcase and help the queries of people. Thank you so very much, sir. Thank you.